Market's running up against some resistance, Scott, and it's about time. It should be. So Apple, McDonald's, Disney, all big winners on the year, all a little weak today. Just take a look at some of the sectors. Banks have been holding up pretty well. We had a little bit of move up in the yields this morning here. So a big leadership group in the second half of the year. Energy holding up a little better. Big rally since the tax law selling ended there. Semis, which has been a market leader all day. There's some profit taking that's going on. Take a look at some of the banks here, because once again, small smattering of new highs today. Not that many, but Citi, JP Morgan, PNC, new highs. Key Corp moving up. It's been a great year for the banks, but not in the first half of the year. Most of the bank rally here, look at these stocks here, new highs, Citigroup, Bank of America, JP Morgan, nice gains for the year. But you want to look at the index, the KBE, which is the bank ETF, and really that was sort of flattish and underperforming the overall market until about here. This is October, and that's when we saw yields started to move up, number one, and the Fed announced these new liquidity measures. I know it's, okay, not QE, don't call it that, but October 11th, and that was right there. And there you can see the bank stocks started coming over, finally breaking out of that technical pattern, the top there that we saw throughout the year. So bear in mind, the banks did really well, essentially, in the fourth quarter. As far as where we're going now, let's just call it a classic Santa Claus rally. I think that's a fair way to characterize what's going on. We've got a quiet, low liquidity market. That means low volume. This is traditionally what goes on here. We're leveraging the existing uptrend that has been out there for the last couple of months. The good news is we've got a hopeful macro backdrop. What does that mean? It means no recession in the United States. The consumer is strong, and there's some hope for a global bottoming in the economy. That's a little bit murky, and that's a bit of a problem, and maybe in the near future. The bad news is we're way, way overbought here. If you take a look at, I look at relative strength indicators on a 2-week basis. This just indicates how difficult or easy it is for the markets to move forward. When you're over 70, you're overbought. When you're close to 80, you're way overbought. This is at the highest levels in 2 years now, the S&P 500 at 78. What this means is it's very difficult on a historical basis for the market to push forward with the same moves it's been seeing in the last several weeks. That means we're meeting resistance, which is exactly what we're happening here. Healthcare. China's been on a rally as well on the trade talks overall. So the one issue out here is this global bottoming story. It's difficult to call. It's a little bit murky. We saw on Friday Japan retail sales and industrial production kind of disappointed. Some of the South Korean numbers over the weekend also were a little disappointing. So this global bottoming story is a little bit iffy right now. In the evening tonight, we'll get China's PMI and non-PMI numbers. We'll see industrial production numbers. Eurozone PMI will be out there. And yes, industrial production is a small part of the global economy, but people still watch it. U.S. ISM manufacturing, we've been below 50 for several months now, really since probably August. And we'll keep an eye on all of that. The question is, a lot of people will say, oh, well, don't worry about the fourth quarter. It's the first quarter that really matters. And we know that some of the governments will come off and say it's not a big thing. The question is whether investors will give us the benefit for the doubt here on that. So here we are. We're very, very close to closing at a new high for the S&P 500. And I think the key thing here is we'd have the best year in 3249 is what we need to close at. Close at 3249 will be the best year since 1997. Still a pretty darn good year, up about 28%. Morgan, back to you.
Bob, thank you.